Hi, Hamish Conway here, and welcome to another episode of Tacos Tuesday, the place for the best Amazon ads, strategies, and tactics. And this is episode 77. And today you'll notice Sebastian isn't here because what I'm focused on today is the Amazon Australia 2025 results. And I did a podcast on this a year ago, but this year it's taken a lot longer for the results to come out. And in this podcast today, I'm going to dive into the details of these numbers to show you what is actually going on with Amazon Australia and give you context, how it sits with other marketplaces and even other advertising media platforms as well. So I've got some amazing stats to go through here. And if you're just listening to this here, there's going to be quite a few numbers there. And I would encourage you to look in the show notes and go get a copy of the slides I'm going to be running through that's got the numbers on it. So you've got that as a reference point there. Otherwise, if you can't see a link there, email hello@gosellglobal.com and we'll email you a copy of them. There's some really interesting stuff coming through because there has been some headwinds starting to appear in the economy and the retail space and consumer spending. And Amazon has really bucked that trend. But look, let me share my screen for a moment. And what I'm going to show you is where does this information come from? So Amazon Australia, or in fact, Amazon Commercial Services Pty Limited, because obviously they're a massive company, but this is the Australia branch of things, excluding AWS. But because they're a large entity, they have to do this reporting and through the Australian Securities and Investments Commission. So they've got their audit, etc. And this year it took a bit longer to get out because of sustainability reporting that they had to include, and also given the amount of infrastructure investment, there's a lot more auditing challenges potentially. So I put into Gemini and to every day at 9 o'clock to check and see if it had come out, and it kept on saying no, it's not out yet. It should be, but it's not. And then it actually came out on, as I'm recording this here, it came out on Monday, the 27th of April. So on Anzac Day that people were taking off here. Anyway, so it's this long, boring report, auditor's report here, and most people will be asleep by page 17. But as you keep on going, you dig into the notes and it starts to about page 30 odd, have what I'm really looking for. Where is that? Like page 33, it talks about the net sales and it breaks down the online store, which is 1P, third party, subscription, advertising. And then there's some other interesting areas that I've found. So I used to be an accountant actually back in the day. And so used to be good at reading financial statements. And so I did dig into those, and I've got a few call outs that I'm going to make as well, but mostly just going to be having a look at the revenue side of things. So that's actually where this info comes from. You can also go to ASICS and buy it. It cost me $50 to buy it, so saving you $50 by giving you the highlights. All right, so let's dive in and see what else we can learn. So look, last year I broke this down, and I looked at 5 key areas. So one is their online store, which is the 1P, and then looking at the 3P side of things, then having a close look at Prime subscription revenue and Prime membership, and then there's Amazon ads. And then I'll look at Amazon's own marketing, what they're doing to drive consumers to shop from them. So that's what we're going to look at. Now, as an overall picture, with their Amazon Commercial Services, the revenue that they count is $4.77 billion. Now, that's not to be confused with the actual GMV or sales that consumers are spending on the platform, and I'll break that down for you in a moment. But look, here's the key numbers. So it's got and I know for those listening, I'll just explain what they are, but through the numbers, you get the idea. Last year for the online store, which is what they count as the vendor sales there where they've sent out purchase orders, they own that stock and then they sell it. So that did $2.327 billion this year, and that was up 20.2% from 2024, where it was just under $2 billion. So 20% growth for the 1P side. Then on the third-party seller services, so this is the revenue that they collect, and I'm going to dive into each of the detail on this. That was up 36.2% to $1.1 billion. Subscription services, this is Prime, and that's up 31%. To 633 million. Then advertising services, they're up 61% to 392. And then the other numbers there we won't look at because related party, that's all a bit confusing. So what we're really looking at here is some serious growth. Now, so the online store, like in 2021, and this is 1P sellers, that was doing 886. So in the last 4 years, it's 2.6x to 2.3 billion dollars. So that's a 27.3% CAGR. Okay, so that's an interesting number to look at right there, and really is continuing to grow, and by significant amounts off that base. And I was expecting it to be in around this, but because we look after around $100 million of sales on the platform. So I'm not surprised to see, because we've seen similar natural growth, actually more with our clients as well, because we're driving above the norm. But that's significant growth there on the online store. And this is just those vendors, which can tend to be some of the household brands, bigger brands there that are selling on the platform. Then switching gears a little bit, but I'm going to come back to the overall online store numbers in a moment. This is a really fascinating number here. Amazon Prime subscription. They don't give the exact numbers they've got, but based on how they charge, it's like $9.99 per month or $79 per year. And looking at some industry metrics and around how many people will buy the paid monthly versus the annual subscription. I've got it down to, looking at this revenue here, 633 million, and that's up 30%. And for Prime members, just if you're listening to this here, that means as a Prime member, the main thing you get is free and fast shipping from Amazon, like the same day or the next day. You also get the TV, you get there's audio and other games and other reading, etc. So it's an amazing deal. But even just for the shipping, it makes sense. So this is 633 million, significant. And that there would mean, based on these monthly numbers, that they have around 5.6 million, or half, approximately 50% of all Australian households will have a Prime subscription. So I want to call that out, because if you're not there or not really making the most of this, then that's a big opportunity. That's where a lot of your clients actually are. And here's the thing, because shoppers trust that delivery, and this is really your conversion advantage. And what we're starting to see increasingly is brands will be doing work on Meta or Google, but it's spilling over into Amazon, where people are converting because they trust the platform. They know if anything goes wrong, they can get a refund, and they trust the free and fast delivery. Amazon is an amazing conversion mechanism for brands. Even if you're really focused on your own D2C, or you're in a lot of retailers, more and more consumers are looking here. Now, it was actually an interesting thing. I did read in my little Gemini thing, it came through saying that the rural areas have doubled in terms of purchases coming out of the rural areas. I don't have any kind of fact to that or reference back to exactly where that came from, but I expect that to be pretty accurate, really. So those living in the country are getting that free delivery to them, and that'll only increase as well. So I think that's a really fascinating number there. So over half, or approximately half of all households are Prime members now. Amazing. All right. So then we move on to this third-party sellers. This is where I got a bit confused on this last year. And I was thinking the online store, well, that's what amazon.com.au, that's the sales they make on there. But actually that was incorrect. And so in their P&L, they put this 1.14 billion number here, but they just recognize the referral commission or the FBA fees or storage fees or subscription fees that they receive from third-party sellers. And just to be clear for those listening here, a third-party seller is someone who is on the marketplace, but it's more like on consignment. Amazon isn't sending them purchase orders. They are opening up an account. They can either send their stock into Amazon FBA warehouses, or they could fulfill it themselves, a bit like in a normal D2C, as if it was a website sale for themselves. And it tends to work better when you use the FBA because of the people trust the free and fast delivery. But anyway, so Amazon has collected 1.14 billion from third-party sellers. But there's a mistake I made last year where I didn't factor in the actual revenue that will come from that. So I want to correct that. So I underestimated how big it was, and I've gone and redone the numbers there. But well, here's my maths on it. Okay, typically, and this could be plus or minus, so this is not exact, this is an estimate. But the fees that they collected from Amazon would be about a third of the total revenue, the total GMV that was generated on the platform. So if we take 1.14 billion, divide that by 0.33, that equals $3.46 billion in sales. And when you add that to the 2.33, which is an accurate number from the 1P online store, that gets you to 5.79 billion. So knocking on the door of $6 billion in sales that consumers actually spent on Amazon.com.au buying products. So that's a significant amount of money, a significant amount of retail spend that is being spent on the platform. And that was so collectively that's up 29%. So the 3P side of things is really growing, and there's a lot more international sellers coming as well. So that there, I wanted to share that. Actually, yeah, and just jumping. Well, I'm going to stay on this slide if you're watching on YouTube or on Spotify, which has video now as well. Looking, there's a key number here, and I've got a stacked bar graph here of from 2022 through to 2025, so 4 years, and I've got 1P revenue and then the 3P GMV estimated on top. So in 2022, we were looking at 2.25 billion, and now it's up to 5.79 billion. So again, 2.6x in those 4 years. And, the growth rates have been, last year, I've got my estimated collective growth here of 29%, which is, staggering, really. There's no other marketplaces really growing of this magnitude, growing at that rate. So that's, this will be a little bit off because Amazon doesn't have to declare that actual number, but I reckon it's pretty close based on the clients that we work with and the percentage of fees to revenue. I'm probably being a bit conservative, so this may actually be a little bit higher, nearer to 6 billion. But either way, the same formula just shows that growth: 46% growth, 36% growth, and last year 29% growth. So arguably the growth is slowing, but it's off a much bigger base. So again, this is where you've got to be paying attention to this channel. And so where does Amazon sit now in the overall e-commerce picture? So Woolworths e-commerce is actually at 9.6 billion, and that grew by 16% last year. And this is pulling from media reports. Coles, that's at 4.5 billion, and that was up 24%. So actually pretty strong growth there, but Amazon is certainly ahead of that. And then we've got a mixture of the others: Bunnings, Kmart, Officeworks, a cumulative 1.75. And out of interest, Temu, an estimated 3 billion, up 15%. And then you've got Shein, which is grown a lot, up 46% to 1.9 billion. So yeah, total Australia online retail in 2025 was 82.6 billion. That was according to the Australia Post report that came out last month. And online marketplaces making up 18.9 billion off that 82. So marketplaces and Amazon here is an increasingly really important part of the picture, is what we're seeing here. Then in terms of that growth rate, which we're talking to, Amazon at 29%, Woolworths 16%, Coles 24%. And look, eBay Australia has faded, Catch is closed, and the marketplace landscape has really consolidated and shifted over 2025 in a meaningful way. And we'll look a little bit later here at the reasons here of that for Amazon from an investment point of view. Switching gears now, though, to Amazon Ads, which is, Tacos Tuesday, all about Amazon Ads and helping brands invest and get the best results that you can from Amazon Ads. Like in my report last year, I thought, right, they've been growing at 60%, 51, 58%. So I thought, well, likely that'll continue. And I thought they'd go from 242 million in 24 to 363 million, but they hit 392 million. So they're up 62%. And this here is some call outs around this here. They added some new features last year, and particularly around Prime Video ads, but things still haven't really kicked in with Amazon Marketing Cloud and also non-endemic advertisers, which is when you think non-endemic using Amazon ads, that would be like technology companies, motor vehicle companies, travel companies, tech companies, for example, if I didn't already say that. But those companies that don't sell products on the platform, but they use Amazon Amazon's media and Amazon's data, given they've got half of Australian households. What an amazing space to be advertising on. So that there is really interesting. And if you look at that growth in ad spend on the platform, what that also means is there is more competition. We looked at the third party, that's been growing. So competition's really growing, and I'm going to sum up a few extra points in around this, but also just in around the Amazon ads. So Amazon ads at 392 million is around 12% of the entire Australia retail vertical digital ad pool of 3.22 billion. And that was a PwC report from last year. So it's a significant player. I also just want to give some context in around how it fits with Google and Meta. Google, this is like for everything Google, services, etc. That's 9.5 billion in Australia, estimated. Meta is at 2.2 billion, and that's an estimated number. And Amazon is 392 million. So it's still behind Meta and Google, but keeping in mind those are covering all industries, where Amazon is predominantly at the moment, that most of that money is there as people selling on the platform. But it is, in terms of that growth, and also, as we talk about a lot on this podcast, the effectiveness of the results and the transparency of the results, the easy attribution that's getting better and better actually with AMC, Amazon Marketing Cloud. Like, you need to be paying attention to Amazon as a way not just of converting bottom of the funnel advertising, but even higher up the funnel and building brand awareness. If you're launching products in particular, Amazon is a great way to be getting in front of consumers to test and buy your product, and might buy it on Amazon, but then they start to buy it in store. So in terms of the marketing mix, I can really see that starting to shift. Certainly what we see in the US, this has already happened, and it will start to happen in Australia. And look, it is still early days in Australia, and we often talk about this. It's never going to be any easier. It's never going to be any cheaper than what it is now to be on Amazon ads. But you want to be doing it properly, even though the click costs are cheaper, but it is only going to get harder. So having your strategy really dialed in is super important. All right, another kind of switching gears again. This is the fifth point I've got here around Amazon's own marketing budget. So they spent $591 million on their own advertising. And so this could be anything to do with, obviously, digital online with Google. They probably make up a portion of that, Google and Meta. Billboards that you'll see around, the bus stop signs, any other sponsorships they're doing, potentially also their sales teams, etc. But 591 million directed at getting consumers to either become a Prime member or to buy on the platform, or retargeting them on the platform. And that there, given the GMV of 5.79 billion, that's around nearly 10% of that consumer spend on the platform and on Prime. And that's compared to Coles and Woolworths, which they typically run at 1% to 2%. So Amazon is being really aggressive at getting consumers to the platform. And what's good about this is that they are doing a lot of the heavy lifting for you. And you can piggyback off that. This is like in business, you don't want to make it any harder than you have to. And Amazon is providing a tailwind for a lot of brands. And we're certainly seeing where there's retail sales for some brands are flat, not growing at all, but their Amazon sales are growing. And they're in some ways almost putting a bit of a handbrake on it, because they know it's growing, but they don't want to lose, they don't want to upset retailers, which they don't. I mean, it's kind of that horse is bolted. But it's interesting. Brick and mortar retail is struggling quite flat, but their Amazon sales are growing as the whole marketplace is growing, right? There's tailwinds there. So being there really makes sense, and piggyback, get a free ride on their customer acquisition that you can then get in front of. So there's I've got a graph here of just the upwards and to the right graph. So I'm not going to reiterate that, but when you get the report, again, go to hello@gosellglobal.com, or in the show notes, there will be a link there where you can get that report. There's some other numbers on this here, though, that are interesting. Amazon is investing heavily. Their capital expenditure is up 38%. Their lease obligations are up 47%. And they have invested like billions into Australia. They are continuing to do. And what they're really doing is they're starting to build their moat. And with these new warehouses and a lot of robotics, they are just increasing their capacity like nonstop. And they've still got a big pipeline. They are not slowing down at all. They will just continue to add and continue to add. So again, they're not going anywhere. And this is a horse to back. Amazon is the everything store. You've got your Coles and Woolies that are more FMCG, and with their online delivery, it could be click and collect or it is being dropped off and can be same day, but Amazon is starting to catch them up. And Amazon will also be looking at some other grocery options as well. There's some rumors out there about Harris Farms. So yeah, so it's going to be interesting. And their headcount up 30%. So all of this investing, they're investing flat out. And that is like a key message that is undeniable there. Okay, so what does this mean for you and your brand? And so this is maybe some conversations to be having around the boardroom table or in the marketing team meeting. So look, if you're not on Amazon yet, the window of we'll get to Amazon eventually is closing. Half of new third-party sellers entering Australia are international, and they're kind of Amazon hardened. And a lot of them are very aggressive, and it's just getting harder, and the cost of waiting is really going to cost you a lot more. So the longer it's left, the harder it's going to get, the more expensive it's going to get. And one thing with Amazon is time on the platform really matters. And if you get in and start to build your ranking, then that you become harder to unseat. The longer you leave it, the more you've got to spend to get up the rankings. So another thing might be is if you are on Amazon but coasting and set and forget and worked in 22, but with cost per clicks, they continue to rise, just creeping up with the overall ad spend there. There's more competitive. There is only ever one first page for every search term, and that competition for top of the search or branded banner ads is getting more expensive. So so that's a factor. If you're not looking after listings or maintaining them or changing them, then you also lose market share. Amazon likes to see that it's active and it is actually working and converting. We still see so many brands underinvested and in their content on Amazon, and it looks poor. It's a bad representation of the brand, and it doesn't help convert. Better listings and better storefronts have a high conversion rate, which amplifies your advertising performance. So it is one there to really be looking at closely. So the brand's winning, world-class content. They've got really carefully structured ad campaigns and bid strategies, and they're now starting to use DSP as well. So that's something to think about if you're on Amazon, but you're coasting. If you're a 1P vendor brand, Amazon's retail team, as you probably know, they continue to negotiate very aggressively, consistently, and annoyingly, to be honest. And so now some brands are actually evaluating the third-party approach, wanting to do hybrid, which is a bit tricky in Australia. But, if you're a distributor and you've got new brands coming in, put those on as a third party. Or if 1P is just not working and you, from a profitability point of view, then third party can be a great way for you to go. Like in the States and in the UK, that's third party is massive by miles. You've got to be doing 10 million a year to even be a vendor. So the vendor team here is kind of acting like they are the biggest show in town. And it's a really interesting time. Like and when you look at these numbers, though, they are getting an increasing amount of proof to the pudding that Amazon is really driving a lot of sales. So it might be time to review, just making sure that you are maintaining your margins there, or consider the third party approach. Right, allocating media budgets. As I was saying before, Amazon ads it's got this closed loop attribution, and some things we're doing with AMC. If you listen back on the other more recent podcast there with Amazon Marketing Cloud, where you can be looking at so many really amazing metrics, from lifetime value to gateway ASINs, time to second purchase. So, sponsored products advertising is all about the search terms and about the products. AMC is all about the customer. And that's amazing data that is so undervalued, and you can play by a completely different set of rules and just absolutely smash your competition. So that's going to get more. That's really interesting now. like it's been harder to do, and it is still a little bit tricky in terms of the running the queries, etc. But you want to be paying attention to that, and that's something Seb is having great conversations with brands at the moment. It works if you're a kind of a bigger, more well-known brand there, and you're already doing 7 figures plus on the channel. So, but you can get some amazing data that can really help you just get laser focused on your advertising strategy. So that's what you want to be considering. And if you're launching new products, this is a great way. It should be part of your whole media mix across the board. All right. So that's some of the conversations I think you should be having. But overall here, it's really Amazon isn't going anywhere. It's growing fast. It's adding market share from a lot of brick and mortar retailers. And it just needs your attention. From 5.79 billion in sales, 29% growth, 5.6 million approximately Prime members, Amazon ads growing fast. This is some key takeaways here for you to be thinking about, and how seriously you are looking at Amazon, and they're continuing to invest heavily in CapEx and more fulfillment infrastructure that is going to only get better and better. So where to from here? My picks for the 2026 year that we're currently in, already in May, actually at the time of recording this, a little bit, it's a shame those numbers take so long to come out. But, I think keeping up at that 20 odd percent, we're looking at 7 billion GMV on the amazon.com.au store. The 1P to be up around 2.8 billion. That may not grow as fast as the 3P advertising. It's just under 400 million to, I think is going to continue at that rate, particularly with Prime TV and a lot more on DSP and in non-endemic, up to 580 million. And can they crack through the 6 million and get to 7 million Prime members? I'm sure they'll want to. That'll be starting to be hitting full capacity. So that's my 20 cents worth, or $50 worth, you could say, based on the cost to get the report. So yeah, hopefully you found that interesting. Obviously, if you get the report there, go to hello@gosellglobal.com then, or look in the show notes here, and we'll have a link there for you to get it, so you can share with your team and really just start to think about, okay, are we playing the Amazon channel as well as we could? If you're not sure and you'd like to get some expert perspective on what good looks like, given Sell Global looks after $100 million of sales on the platform and millions in ad spend, we know what good looks like. We know what the benchmarks are. So we can help you benchmark. And from an advertising performance point of view, we can review content, your overall strategy, and we can also look at the AMC, Amazon Marketing Cloud review, which is quite a bit of work there, but it's amazing the value and outcomes you get from that. So if you'd like to have a chat with us, please connect. And if you look at gosellglobal.com and you can book a call from there, that would be fantastic. And otherwise, thanks for tuning in. And here's to a big 2026, even though we have got some headwinds of what's been going on in the Middle East there, and certainly pressure on fuel prices. It's going to be interesting to see how it goes. I mean, I actually think Amazon is still going to be a winner through this time as consumers drive less to the stores and they buy online more. I think Amazon is going to be a real beneficiary of that. So again, it is something you want to be making sure you're there. Millions of Australian consumers are there. If your product isn't there, or if it's there and it's not presented very well, or you're not getting discovered because of the no real advertising strategy, then it is time to take a serious look at it. So, all right, there you go. That is the 2025 Amazon Australia ASIC filing report, done and dusted. All right, thanks for tuning in. All the best. Bye for now.